Welcome back to another video with Money Finance Freedom, your ticket to financial freedom. Today we are going to be talking about the fintech industry. I'm going to be giving you three stocks that I believe will perform well in 2021. Two of the stocks that we're going to be talking about are focused heavily on the digital payment side of fintech, and the other stock is focused on business development. With that being said, let's get into the video. First stock we're going to be talking about is PayPal. Now, the stock ticker symbol is PYPL for those of you that don't know. Now, PayPal has been on a lot of our watch lists over the last few months and for good reason. It has performed exceedingly well. Now, if we look at it over the past few days, we're going to see it bounce around and then shoot up, similar to what we've been seeing for the past year or so. This stock has a general uptrend, which we love to see in these large cap companies. Now, with COVID going on, PayPal has been doing great. It has become one of the preferred payment methods for a lot of companies and for a lot of users that are constantly on their computer buying products online. Now, we've also seen e-commerce boom overall. You can watch plenty of videos on drop shipping and all these other methods to create your own website. Most of them will be using some form of PayPal. So overall, PayPal has benefited greatly from the lockdowns. Now, we understand that PayPal is an older company and we're worried about how it will do with the newer generations. Well, PayPal's thought of that as well, and they recently acquired Venmo. Now, Venmo is one of the more preferred payments for the millennial and younger generations. Gen Z's been using it nonstop, and it's constantly been growing. Its average downloads on Apple is usually one of the leading products that it has because people are constantly finding new methods to pay other people, whether it's babysitting, soccer trainings, or anything else you can be doing on a small scale. People are using Venmo, and even on larger scales as well, such as paying rent. Now, PayPal is looking to capitalize on their recent purchases and become an industry leader in digital payments. This is why I believe that PayPal is definitely a buy in the short term and in the long term. It is a well-established company that we're going to see gain throughout the rest of this year as the market goes up as well. We're in this bullish trend with the market. PayPal is going to follow that. And if more of their acquisitions pay off, we're going to see it go a little bit above market value. The next company we'll be highlighting is Visa, stock ticker V. Now, we all know Visa has been around for a long time, but it's interesting to look at their chart over the past few years. Now, we're going to take a look back over the last year, and we're going to notice this large dive in March. Visa obviously deals with finance, and any time the market dives and a lot of people are losing money, Visa is going to do relatively poorly. Now, people are going to panic sell a lot of their Visa stock, but the good thing about Visa is that they are constantly dealing with the financial industry, so we know it's always going to bounce back. They're always going to be saved. There's always going to be money circulating throughout the market, and we just have to wait for it to recover. And we've seen just that with Visa. Now, Visa has also been around for a while, and just like PayPal, they're looking to adapt to the future. And something they've done is they've recently acquired Yellow Paper. Most of us probably haven't heard of Yellow Paper, but it is a company in Latin America that is slowly looking to expand. So this means that Visa is trying to acquire more and more companies to broaden their horizons. Now, a lot of people are looking at Visa's balance sheet and they're noticing that it doesn't look very strong. And that's because they're really leveraged on the side of debt. They're getting rid of a lot of cash because they're expanding and they're acquiring more companies. If we look over here at Google Finance, we're going to notice that Motley Fool has been talking about Yellow Paper, and a lot of other the big articles on Visa have been about their acquisitions. Now, the stimulus checks are really going to boost the Visa stocks. People have more money to pay their credit cards off, and really it just puts more ease of mind on the people that are slowly investing back into Visa. Now, we're seeing a lot of different credit card companies such as MasterCard and Visa doing really well over the last 5 years. And this is the chart that speaks volumes to us because we see that in 5 years, they have grown very steadily. Now we've had these big drop-offs, but those can all be related to the overall market. It's not something that Visa is doing right or doing wrong that helps their company grow. Now, I do believe that the recent crash of the Visa stock was obviously from the pandemic, but the future growth of the stock can be attributed to their good decisions they're making, such as buying Yellow Paper and acquiring more of these small subsidiary companies that will help them grow into the future. Now, the last stock I'll be talking about is a lesser known company. I like to give the standard companies as I'm doing these watch lists and these reviews, such as PayPal and Visa, the companies that have been around. Those long-term investors can see steady growth and they can feel comfortable putting their money into those stocks. Now, I have to remind you guys that this is always for entertainment purposes and this is not financial advice. The reason being is because I always like to give you guys a fringe stock, one that I don't know if it's going to do well, but it's something that I'm looking into. It's something I'm going to be tracking in the near future, and that's Zora, Z-U-O. Now we're looking at their chart here and we can notice a little bit of volatility. If we go back and we look over the last 3 years, we're going to see extreme volatility and really far down from its all-time highs. Now, what that means is that there is a good idea here. We do see relatively good volume with this stock, and what we're noticing is a uptrend in the last 20 days or so. Still a lot of volatility for my taste, but we do have a good entry point. You notice the stock was trading up around $30 to $40, and now we're down to the 10 to 15 range. We're going to bounce around in here for another couple months, but as this company starts to grow, we're going to see a lot of investors looking back into it. Now, what Zora does is they help with subscription-based companies. They automate billing, collection, quoting, and revenue recognition. They also give metric on user subscriptions and how to maximize success in tech markets. So they're really growing with the SaaS industry. As people are starting to buy more and more products online, they're using these subscription services. Someone needs to manage that and show how these companies are growing. These companies constantly grow at a rate that they're not used to. Since subscriptions are easy to buy, sell, renew, and drop off, it's hard to keep track of your user base. How strong is your foundation? Now, what Zora is going to do is they're going to give you those metrics, they're going to give you those statistics, and they're going to help your company grow. So as the tech industry grows online and the SaaS companies grow online in every industry, we're going to see Zora ride that wave. Now, all Zora needs to do is make one or two good decisions over the next year or two, and we're going to see their stock soar. They need to sign on some of these bigger SaaS companies or subscription as a service companies, and they're going to have an upward momentum along with the rest of the industry. Now, I do want to make a side note on Zora. While they are a relatively low stock trading company, I wouldn't consider them a penny stock. I wouldn't consider them a foundational stock. What they are is they're more in that gray area. So you've got to keep track of them. You can easily invest in one of these uptrends and then immediately see a drawback like we've seen here. We don't want to see that too much with our investments because what that means is that we're at high risk and we're leveraged in the wrong way. We want to use our investments from things like the S&P 500, our more stable ETFs, and maybe even our Tesla profits. If we're going to take those and move them somewhere else, I'd recommend keeping them in Tesla for now, but use that extra cash to invest in things like Zora, some of your penny stocks, have a little bit of fun with it, but remember that money you've got to treat it as if you're throwing it away because it might all be gone in one day. Now that wraps up the video for me, guys. Thank you for watching. That's another day with a Money Finance Future, your ticket to financial freedom. Now, I want to talk to you guys a little bit more in the coming videos about 5G, some of the more tech industry leading products, and a lot of industries that I'm looking into. But even better, I want you to tell me what you guys want to hear about, and I will go ahead and make a video on it. So please hit that like and subscribe button. I will be here for you guys day in and day out, posting as many videos as I can, reviewing these companies. Thank you.